I screwed it up today. Oh my God, I screwed it up. Ah, I was so short. I was so short yesterday, UVXY, and then like towards the end of the day, I was like, okay, well, some new funds are going to clear. I'll take off my short. I'll put it back on tomorrow morning. It'll probably be a little higher. Flattened out, went totally to cash yesterday. I wake up and UVXY was indicated down like 2.5 points already, and I was just like, oh my God, am I the worst market timer in the world? And you know what? It just reinforces the fact that nobody's going to be right at timing the market all the time. It's very random the way it works. Let me take these goofy looking headphones off now that I can see that the sound is working. It's just completely the luck of the draw a lot of times what the market's going to do from day to day. And yes, it's very frustrating, but me being a position trader in UVXY, the thing is you put a short on and you just leave it. As long as you're, if you're trading options, as long as it's, a couple months out, you just put it on and you leave it. Now, I would have liked to have entered at a higher spot than here, but better entry than it would have been, a week ago when we were around the 37 level. So if we look really quickly here at the charts a little bit of our little sample portfolio here, we can see, and I'm going to pull up the UVXY chart here, and we can see the different steps down that we have had in the last year. I'm going to go to the half-year chart actually here, and you can see it stepping down. You can't see anything because I'm in the way. You can see it stepping down here, okay? Let me try to make this bigger for you so you can see it even better. I'm going to make this much bigger, or try to. Let's see. What am I doing that right? Yep. No, I'm not. Display capture. Here we go. And you can see that it takes these steps down. Okay, there you go. See that big, here's one, boom, spot to sell it right there. Right there. Then, it goes down. Another little mini spike over the last day or two. Boom. Goes down again. Now, right in here, towards the top of the spike, you had me come on and saying, well, we don't know where it's going to go from here. Most likely, it's going to go back down. But, we have had times, if we back this chart up, where it didn't go down for quite some time. In fact, if we look at that period last year, from October, this is 3 months here, folks, where it's going up, basically, sideways to up for 3 months. So if you're thinking, well, I'm putting a short on and I'm going to put it a week out and it's going to be fine, it might not be. This is kind of an extreme situation we had last year where it went on for 3 months of like an uptrend. That's very rarely happens in this issue. And it had people really scratching their heads and saying, maybe the curve's just turned around and we're going to go up forever. Now, mathematically, as long as we're in contango, most of the time, it can't really go up. So mathematically, that wasn't destined to happen. However, it was a head scratcher for people because we had 3 months of this like building. And we still haven't taken out the low, 35.04. But I believe we are on the way to. So if we get back to the present moment here, yeah, it was a bummer for me that I didn't, I was short up here and I covered it here. I could have gotten short at 45 instead of down here at 41 and change. And that's a real, I was like throwing pillows around the room. I don't know what do you do when you're angry? I no longer do drugs or any of that stuff, so it's not something like that. But yeah, real frustrating today. However, I did jump on, and it seems like we are continuing to go lower right now. But wow, I mean, what a missed opportunity for me here. It seems like a lot of the time the best advice is to just leave stuff alone. Doing nothing can be the best thing to do with so many positions. And, you know, if I just left my position on doing nothing, I think I was short, I don't know, like 200 deltas or something. But, you know, that would have been another, you know, $600 right there overnight. And instead, I'm messing around. Now, I could have, you know, I said, well, I was waiting for more funds to clear. Okay, well, I could have left the position on and just added to it. But, yeah, I got skittish, I guess. I thought that maybe it could go higher. But here we are. We're back in contango. And it's starting to become a situation where we are averaging being in contango more. The average is moving up. You know, all through that period I was talking about back there with October, November, December, that was one of the longer periods of backwardation, and we were averaged, like, with that, the whole year last year ended up averaging, you know, almost zero, because we had that huge period of backwardation. You know, you see this whole up move, and we were in backwardation a lot of that time. And then, you know, contango, we were like flat for a while too. But now all of a sudden we're putting together days where like contango is 4 or 5%. When we get right towards expiration, it pops to like 10%, and we're starting to get back in the zone, that contango zone, where it really does start to seem like, oh, this is easy. You just put the short on and you make money. Let's take a look at VIX Central at the contango chart. Now, if you do go on VIX Central here, you can pull up this contango tab. And I like to just show the F1, F2 contango. Now, I use M1, M2, but you can use F2, F1, F2 for the first 2 months if you'd like. And let's just look at this last year. And you see, okay, so this is a contango chart, and it's really easy to read if I would get out of the way once again. And, okay, so everything, and let me back my charts out so it's back to normal again. Everything above that red line is contango, and everything below that red line is backwardation. So, so anytime we're above that line, the edge is that these things are decaying. All things equal, these things are decaying. Backwardation on the other side there is these things are, their value is being pulled upward. And that's a big period where we're in backwardation. Okay, that's months. So once again, when we put these positions on, they can work for us, but we want to give it time to work for us. And you can see here, our contango got way up here and then came back down again, almost to the line. And we'll see if it regains. This line here is not complete because it doesn't have today yet, but if it did have today, it would be back up. Let me back this out so you can see the scale a little bit better, because we're not showing the scale here. And the scale, you can see on the left side of this chart here, it shows 5-10%, and so it's getting up to over 20% there in this chart, or it's 16%, and that was a 2 days before expiration where things were just really out of whack. However, these days all count because we are rebalancing. Even if you're like, oh well, there's not that much, you know, a day before expiration, most of the ETPs are made up of the second month future. So this would have been like February, March. Okay, there's not much February, March. There's not much Feb future left, but they still are doing that rebalancing where they are selling the Feb and buying the March. So this is counting towards decay, 16% for that one day. That is decaying the ETP. All right, so and if we were to add in today, so far this blue would be starting to move back up again. And like I said, you know, big period of backwardation here. Could we go back to that? We certainly could. You know, you see this whole period, March, April, May, June, July, August, September. You know, it's this whole period where we were just in contango, and if you'd shorted these things, you'd be making money this whole period here. And then this big period of backwardation, historically big period of backwardation. However, those are generally pretty rare. So we may not see that for some time. Time will really tell here moving forward. So there you have it. And our VIX for the day, your daily VIX. I am leaning very strongly towards renaming the channel Daily VIX to give you your daily dose of VIX. So you can go and check out all kinds of channels to see guys doing day trading or charts or telling you how much money they made and saying, well, come to my boot camp. I don't know why every single person that wants to have a stock market business has this idea of like, oh, let's have a boot camp. It's like this concept of like, well, you have to work really hard and you're a soldier with all these people and work really hard and be, boot camp for soldiers is supposed to make you all act the same and, respect authority, all act the same and mold you into these similar people that all work together. That's the opposite of trading. As a trader, you have to have your own individual ideas and you can't be the same as everybody else. It's kind of the opposite of being a soldier in that you have to think for yourself. You have to maintain focus while having all this data coming at you, but you have to think for yourself and not be influenced by others around you. So I know it appeals to people's sense of like, okay, we work really hard, and we get trained up, and then you're sent out to battle where you day trade or something like that. But the analogy doesn't really hold for me, A, and B, it's just it's such a cliche, like, all these muscle-bound guys, okay, let's go pump iron, and then we're going to go day trade for 2 hours in the morning, and then we're going to go sit by the pool outside, and, we're jet skiing, we're having so much fun, because we only work 2 hours a day. Whereas, everybody has their own way of doing it, and if you can make money and have a life that way, that's great. More power to you. If you can figure out how to make money in the stock market on a consistent basis, then, hats off to you. Whatever you do that works for you, that is awesome. But I'm just saying, most of the people that are successful that I know, they don't just work for an hour and then go off jet skiing somewhere. They spend a lot of time researching, looking, watching what's going on, and focusing in on whatever their particular product is. Whatever you focus in on, you want to try to be the best person in the world at that. And that's hard, right? And you're not going to be the best person in the world at, say, the SPX option pricing, because there are all these firms with the tons and tons of smart people setting up and all these models and craziness focused in on that one product. So, you hear new traders in like an options forum saying, oh, well, this SPX put, that's really mispriced. And, if you're looking at the SPX and you think something is really mispriced, then chances are that not that thousands of people or hundreds of people that put their input into making those prices are wrong and you're right. Chances are that you're missing something. And that's just the way it is. Now, of course, there's been cases, The Big Short, is an example of where like a couple guys get it right when everyone else got it wrong. But you got to think on average that's not going to be the case. It's this whole, I work at this gas station part-time, like 1 or 2 days a week, and people come in and they buy these scratch tickets and they always think they're going to win. And there's this idea that like, okay, I put $1 in and I win $1 million. That's like the goal for so many of these people. And you know what I think of the whole time? When the scratch tickets and all this stuff, I don't think, oh, I'd love to buy a scratch ticket and win $1 million. I think, wow, is there any way that I could start my own scratch ticket business where the government isn't making all the money off these people, where I can make some too? Like if I could have like, okay, so here's the government scratch tickets and here's Dave's scratch tickets over here. Dave's pay out a little better than the government, so come get one of Dave's scratch tickets. I would just love to do that. And yeah, person could be the big winner sometime, but I'm still, let's say, I think the government average for scratch tickets, let's say it's 68%. So, you put $1 in, you get 68 cents back. Okay, I'll raise that to 75%. You know, expected return 75%. You put $100 in, you're gonna have a $75 winner, and you know you buy 10 scratch tickets for $10 each, and you're gonna have one $75 winner in there. And people they're excited if they spend $100 and they get a $75 winner. They're like, yeah, I'm winning. It's just unbelievable. And so you got to have the mentality if you want to be make money in and out in the market. You have to have the mentality of I'm going to take money and I'm going to make a little bit. I'm not going for the big score. I'm going to make a little bit day in and day out. And you kind of have to have that mentality. And of course, trading doesn't work that way either. It's never a steady P&L. At least for me, it's never been a steady P&L. It's been very rocky. It's like one big win and then you know, it's always different basically is what I'm saying. But I never focus on, well, how much money am I trying to make this day or week or whatnot. I just focus on what's the next best thing I need to do to manage my risk the way I have it right now. And just looking around for opportunities, whether it be through scanners, through reading stuff, through maybe looking on like StockTwits to see what the most actives are, looking at what earnings are coming up, looking for opportunities out there, researching. And that's what you should be doing too, I would think. I don't enjoy most of the stock market stuff on YouTube because it's just guys sitting in front of charts basically telling you what happened in the past. There's got to be more to it than that. I like a lot of the coverage that's like macroeconomic news, like describing how the economy works in broader strokes, or microeconomic news describing how a company works. And people analysts get really into analyzing a company, and you can be really good at analyzing companies, but the stock has a lot of companies. The stock will have a life of its own compared with the company. Now there'll be some relationship there, but a lot of times the stock market is just a popularity contest, and there is seemingly not a lot of correlation between like what a company's doing and what its stock does. It's very it can be very bizarre, and there can be a big disconnect at times. And in a way, it should work that way, where like, okay, you research, you find good companies, and the stocks go up. And maybe it works that way in general terms, but on a case-by-case basis, there can be a huge disconnect between like what a company is doing and what its stock price does. Anyways, I rewatched that video that I made this morning that has me at the house talking about those wins, and it's a bit awkward. But you know what? I just got to keep doing it, and it'll get better. I know that's the case. I appreciate you sitting through my growing pains and taking this journey along with me. What I would appreciate even more is if you would make a lot of money trading and you're able to celebrate with me, because there's nothing more rewarding to me than hearing somebody who's watching me saying, well, yeah, I killed it today in the market. That's the exciting part that's the most exciting part for me. And so I love to hear those stories. So keep reaching out to me, and let's keep the conversation going. It's really exciting. I've met all these people, and I've established relationships with a whole bunch of different people. And some of them are just as much as we talk on Twitter once or twice a month, or we have interactions on StockTwits every once in a while, or maybe we talk on Facebook chat every once in a while. Stuff like that. I have met tons of people that way, and in the end, the market is all a bunch of people, and those friendships that you get and the information that you get from people, those are the things that you're going to remember in the end as the money comes and goes. All right, so let's see what happens the rest of the day today, and if we do really follow through to the downside in UVXY here, or if we turn around and we get another spike. We'll have to wait and see, but I'm back on the short train. If it's Murphy's Law, then now that I got short, it'll go up again, but Like I said, long-term trade, put it on, forget about it. Don't look at your P&L. Come back. Try to come back in a week. I know that's easier said than done, but try to come back in a week and see where we are then. Once again, some of the best advice can be to, in most situations, the best thing to do, and this is not just in trading, but in life in general, can be to do nothing. Say nothing. Keep your mouth shut can be the best advice in interpersonal relationships. At so many times, it's like if I had just kept my mouth shut, everything would be fine. Oh boy. It does smart today, though, that I covered my short when UVXY was up at 45, and then it gaps down on the open. That does smart a lot. Oh, boy. All right, but I'm going to stop complaining about it and move on with my life. You take your trades from yesterday, you throw the cards over your shoulder, and you move on.